about me and me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself. They not like us, and they know that. They not like us. We ain't gon' do. They not like us, and they know that. They not like us. We ain't gon' do it.
Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over-under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say, based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so small.
So crack open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Statman.
Good
Big
morning, everybody. You gotta time it. You gotta time it right when they say it. You gotta be like, get your baby lock them doors. You gotta do the
yeah.
and a big spreadsheet. Morning, everybody. What's going on, guys? Mark Taylor, bro. A lot of people have liked that. And I was like, dude, guys, this is just an AI generator, but it's crazy what you can do with AI nowadays. Morning, everybody. Morning, good morning, good morning. Niels, good morning. What's up? What's up? Jay Barr. What up? All right, guys. I'll get into a little bit. My analysis is going to be pretty quick this morning, and then I'm going to hand it over to Mickey here because I'm just going to be completely honest with you all. One of the reasons why, just as a disclaimer and to say this right before we go into anything, one of the reasons we stream on Mondays and kind of do what we do here is to show anybody and everybody that if you want to see how we trade, because it is a little bit different, is a little bit different than what you typically see. We use these Mondays, and then on Fridays we do the analysis for this very reason. So if you guys have questions or kind of want to see a little bit of what we do, this is your all's opportunity to ask in the chat or whatever. But in addition to that, another reason why we do this is to show you all the actual realities of trading. You know, not every day is going to be beautiful. Not every day is going to be home runs. Some days we have it just perfect and it lines up. We take our piece and leave in 5 seconds. We're done for the day. Other days it's kind of like what we have today. And in my opinion today, it is going to be pretty risky in terms of putting on a trade, only because of a couple things. Number one, the volatility is insane right now. If you look at my chart, just as we speak, I mean, a single candle, like we've moved 40 points in just a few 5-minute candles. This is something that like we don't typically do. And then Mickey, I'm sure we'll probably get into it even more in depth, but the fact that we're moving with so much volatility in such little time, this already puts you at risk of you need to decrease your contract sizing. Like if you're using a mini in an environment where the volatility is increased, you're going to, NASDAQ's going to barely move, right? And you'll get severely into drawdown if you have a normal stop loss that you typically use. So sizing down in a highly volatile market like this, where the average price movement is very high, this is something very crucial. But in addition to that, from a statistical standpoint, this is what I call when we're in between statistics. So when we're in between reasons to go high and we're in between reasons to go low. So you can see right off the get-go, the first thing I look at is I just want to see where we at within the highs and lows of days. So this is an in-stat low of day, 1800, right on the spot. We have an in statistic at 330 high of day. Now, the 3 o'clock highs and lows of days, because this is something a lot of people has asked before, is when it comes to these highs and lows, and these 4 major times, the 3 o'clock is the lower one of the 4, right? Like if you were to, there's been many people even on Twitter and stuff, they've fact checked the stuff that Mickey and I do in terms of where those highs and lows are. And they kind of start, showing the same distribution of statistics where if you were to weigh out every time, the 3 o'clock is the lower, but it's still kind of upticked in relation to the other times. But the 3 o'clock is the weakest. And so even in situations like this, where we have an in statistic low of day, and then the 3 a.m. or the 3:30 is the high of day, if we're respecting the P12 mid and we're respecting this low of day, if I have to choose, because typically at market open, we will take one side. We will take a high or a low at a minimum, one of the two. We don't typically form the range. Now, do we do it sometimes? Absolutely. But do we typically do it? No. And so if I had to choose which high or low is most likely going to be taken right now, I would say this high is the weakest of the two. In relation to also, we still haven't even came anywhere close to the P12 mid, and we're starting to try to head our way back up there. So we'll see. But then,
I'd like to add real quick.
yeah,
Right?
yeah, go for it.
I got to give credit where it's due, right? But it's one of my all-time favorite examples in a book. I know that's fun. They reference a book, right? But best loser wins, right? Like, and they do explains the example of, whatever system he was using. I think it might have been Elliott Wave, and he had stats on every Elliott Wave move, blah blah blah, and he's like fading the crap out of the market, right? And his wife walks in and says, looks to me, who knows nothing about the market, says, looks to me, you should buy the market, right? And like, when in doubt, and we tell all the time, like, based off of where we are and where dominantly, where's momentum, right? If we had to like show somebody who knows nothing about the market other than the fact that, hey, we typically put a low day or high day at 1800 and 3 o'clock, right? And look at this chart, Mr. Person who knows nothing about the markets. Which one do you think is going to get hit first, based off of where we are and what this little momentum line is? Like, they would look at it and it's like, oh, that 3 o'clock high day probably would get hit in that 1800 low day. Well, all right, so don't over complex it too much. Not saying you often, but like for the viewers, look at the chart. You can see momentum's clearly to the upside. And if you were to ask somebody who knew nothing about intraday markets and nothing whatsoever, they just understood what up lines and down lines mean, they'd say, hey, the 3 o'clock looks like it's a nice one to get hit.
Yeah. Yeah. I mean, you could even just be like, hey, what's this line chart doing? What's this line chart doing? Or which high is closest? This one?
Yeah.
Or which high or low is close? Obviously this one. Now, we actually seen this last week. I think it was Wednesday. Wednesday last week. Now, because just to show you guys, like, even high probabilities fail. Thursday last week, I was even telling everybody, well, which one's the higher likelihood? Taking out the low or taking out the high? Because the low was a lot closer than the high. And buddy, did we not say, oh, hold my beer. I'll show you which one's the higher probability. And we moved like 200 points to the upside and took out the high instead of taking out the low. So it's definitely possible to do the lower probability one too. But the only other thing I have, guys, is just these levels and where we're at within relation to where market open could form. So if market open is the next checkpoint of time for us to maybe make a new high. So if we make a new high of day somewhere around here in this box representing market open, if we start to take this high to the upside and leave these statistics to the downside here, meaning we got 1, 2, 3 bearish levels to the downside. We have the P12 mid right here. We have the midnight open right here. And so if we open up the market, taking the rest of these bullish statistics to the upside, retracing the rest of these opening prices 1 through 7 a.m., then the only trade that I would really look at putting on today, and it's going to be very reduced position sizing, and also from a portfolio standpoint, I'm only probably going to trade one account because the volatility is so high that it's just not worth the risk for today. But the move that I want to put risk behind is a break below to the downside with a potential in statistic high of day and some sort of cash flow move or an extended cash flow move towards these statistics. Mickey, over to you, my friend.
Absolutely. All right. So definitely being cautious, right? Like, these are the days, like, when that volatility expanding, like a low position size, and I jump over the ES. Why did I jump over the ES? Right, to take trades off of. Right, well, we know that if I'm doing fixed position size, and meaning I trade 1 mini every single trade, like the stop's going to be cheaper over there. But even though I don't trade that way, like I trade risk per trade, right? Like whatever my stop's going to be, like I'll reduce position size, and my actual expense that I can take will be a little bit less, right? Over there. So I'm going to be very aware of what we did on Friday, the one day of the year that I stepped away from the market. And no, I do not think I would have caught that short. I absolutely would not have caught that short. If anything, I would have stopped out on Friday because we had a short falls, right? And kind of to address that, like I had to turn Twitter off this weekend because of the malarkey that was happening on it, right? Number one, if you lost a lot of money in the crypto world, listen, like I'm sorry, it's the name of the game. It sucks, but like a lot of good data can come out of that, right? To the crypto traders, right? Like, go, like you're gonna have to rebuild, right? Number one, I'm so sorry that happened to you, but you're gonna have to rebuild, and it's kind of like I was in the Army for 20 years, worked out every single day. I was yoked, I was in shape. Took 20 years to get in shape. And I could do triathlons. I could lift. I was part of the 1,000-pound club. All this stuff, right? One day I get hit by a car. It paralyzes me for 6 months, and I lose everything, right? Does that mean it's over? No, I actually got an opportunity to rebuild from the ground up. Now, when I first started working out and lifting, like I made a lot of mistakes, right? Bad position, bad form, not knowing how to, work out what muscle groups each day, how to pair them together, all that, right? But when I got hit by a car and I started going through physical therapy and getting to the point where I could actually walk again, I got a great opportunity to start my physical fitness, completely over and do it right. So I incorporated more yoga, more range of motion, more breathing, and did everything the right way. The same thing goes in trading. When you experience a blowout like this, you have to ask yourself, right? I can point out plenty of people, Drunken Miller, Dalio, Simmons, right? I can point out very, very many times where they just hit these huge losses, right? But did they quit? No, they took those opportunities to rebuild, but do it the right way. So every time they get hit like that, the loss is a little bit less, right? But one thing I'll tell the crypto traders that might have lost money, right? I want you to go look at your altcoins, your shitcoins, Bitcoin, Ethereum, in hierarchy of them, right? And see who took the biggest losses and which ones did not take the biggest losses, right? And you'll see the altcoins, the up and coming coins that were supposed to take over Bitcoin, they took 80% to 90% losses, right? Bitcoin lost 5 to 10%, right? So maybe as you rebuild, you factor that in. Even the hedges in the crypto space has just got blown out on Friday. Now, this all happened within minutes, right? And this is the time where you need to ask yourself, does it make sense for me to put my life savings and all this hard-earned money that I work hours to get, does it make common sense for me to stack that kind of money in an asset that can wipe me out in 6 minutes, right? I can't sustain a day. Not even a day, a week, a month, but literally no more than 30 minutes and you're just completely destroyed, right? And so when you rebuild, it's the perfect time to DCA. When you rebuild, there's a reason that you don't see me and Austin up there trading small cap companies, mid cap companies, and penny stocks, because it doesn't make sense for us to have to sustain losses that could destroy our accounts off of bad news catalyst or merger or whatever, right? With our life savings. We trade the NASDAQ, we trade the futures indices, because our portfolios can definitely sustain. And with Austin's dividend investing, he's trading very, very established large cap companies so he can like force him that drawdown. Also, I'm gonna hand it over to you real quick, so you can add notes to that as well.
Yeah, I mean, guys, like if you use leverage for anything that you're trying to, like, I guess, expose 30, 40, 50% of your portfolio or any sort of like wealth, like if a large portion of a percentage of your portfolio is leveraged, I mean, this right here should be a wake up call. Or at least if you're not doing it, but you've thought about doing it, this should be a wake up call. Like, these things can happen in a moment's notice, and you can have the best strategy or the best leverage XYZ in the world. In a moment like it doesn't matter where your stop is. It doesn't matter how much you plan to, doesn't matter how much Neil plans to DCA here. All right. Like you're going to get wiped. I mean, you, unless you have enough capital, but then you also have to ask on the other side of the coin, do you really want to live your life with that stress all the time? Like, no, diversify your risk. This right here is why Mickey and I preach so dang much about diversifying your risk. It's not sexy. It's not fun. It is the least sexiest thing to talk about in terms of even day trading, but it's why we do what we do. It's why I tell you guys, when it comes to day trading in and of itself, I think one of the goofiest things you could do is make money in day trading and then turn right around and take that same cash, that same capital that your business made in a high risk environment and put it right back into a high risk environment. You watched so many people over yesterday. You watched last week. You watched so many people take profits that they've made and get them obliterated. All that work that they did to earn that extra income or that extra money all got wiped for nothing because they were replugging it or reinvesting it right back into the same like risk class. This is why I invest in boring, like just unsexy dividend companies. This is why I'm selling options on companies that go up more than they go down. Like it's not fun. It's not the best return, but it's a consistent return.
Let's clarify what he means. He's not doing the 20 delta spread kind of option selling. Like, he's selling premium to get for the purpose to get exercised into the company. So
yeah, basically getting paid to set a limit order. That's literally it.
Yeah.
You get paid to set a limit order just like you would in day trading, except in day trading, if you set a limit order, you don't get paid for it. It's just sitting there. In the selling options world, you just do what?
Yeah. Like, he's not referring to like the will strategies and the 3-2-1 strategies and all these cash secure strategies that say, hey, premium dies more than it expands, volatility compacts more than it expands. That is true, right? But like, there always will be a blow up point where that volatility turns on and wipes you all out, right? So that's not what he's talking about as well. That kind of selling premium.
Is Mickey sounding, because he sounds good to me, guys. Can you guys let me know in the chat? Is Mickey sounding low?
Let me. Oh shoot! I forgot to put on my air.
Yeah, I figured. I'm trying to DM you and stuff, and some of the people in the chat in the Discord were telling me, but
yeah. All right. So now we talked about that, right? Like, so there's a time and place, and trust me, I've seen it. Austin's seen it. Everybody has seen it. Like, there's these fly boys out there that like to post these cherry pick trades. They like to say that their model caught the top of that move and told them to stay in all the way to the bottom. But like, I want you to go to the daily chart and just ask yourself, yeah, I'm not debating the fact that, yes, there were sell models that happened on the drop. And yes, that is like, there's plenty of models that told you to sell, right? But then I want you to ask yourself before you start dealing with the false advertisement out there, right? Just go to the daily chart and show me any other day of the week, right, that had a $1,200 day and how frequently that happens, right? And then whatever the model that they're saying caught the top, right? I want you to go find all the days of the week where it didn't move for 1,200. So I'm not debating the fact that there were not sell models that could have caught the top. But this is one of those situations where the anomaly move did happen, whether it could have been projected beforehand. Obviously, anybody and their mother, any indication could have told you that, hey, we've been moving up a lot lately, right? And it's, we need some kind of rebalance. But don't fall for the nonsense that there's a single model out there that could have got you 1,250 handles in one day. Because this is where you have to rely on your experience as a human being and the common sense factor and the street smarts that you have to tell you what realistic expectations is, right? So not trying to say that there were not models that told, because I had a 94% probability on the weekly charts that didn't get hit. And I was like, I guess this is going to be one of those weeks. Up there it goes, got hit. I thought it was going to be one of those weeks where now that 94% would become a 91%, right? But use some common sense, guys and gals, right? Do not fall for the most schemiest lemon lot sales pitches out there on Twitter. So with that being said, we're going to move on to our daily profiler breakdown. So the first thing we do, we use a couple of different data sets, right? And so the candle science is one of the data sets that we use, and we can use the open, high, low, close. So right now it's set up, in the future it'll be set up to 5 to 9 candle display. But right now it's set up for a 3 candle display. So whatever time frame you choose, from the weekly all the way down to the M45, right? You can say this is C1, so this would be Thursday, and this would be Friday, right? And get statistics on the third candle, right? The reason we want to do a 5 to 9 candle is so the pattern-based traders that trade like breakers and failure swings and fair value gaps and whatever cup and handle, whatever, you can put this in as whatever time frame that you're seeing that pattern on. You can go in and put the open, high, low, close information in from the past candles to put probabilities on the next candles, right? And so we like to do this with the daily chart. And so using Thursdays, right, on the daily chart, and we've got it for most assets, pound, crude oil, ES, euro, gold, NASDAQ, and there'll be more to come. But it's taken the last 20 years worth of data, 25 years worth of data, and it's allowing you to put in the selection of what did Friday do in relationship to Thursday, and then even for today, what have we done so far with open, highs, and lows to actually put probabilities on our charts, right, from the higher time frame. Now, the daily profile uses what we did in Asia and London, and gives you probabilities of what to expect in New York 1, right? So that's the two separations. One does open, high, low, close, and then the second one does session variables, right? All right, so what we can see is we didn't get an NFP Friday, but I'm still using the NFP Friday box to make decisions around, right? So if we can't close back above this NFP Friday, we start closing below previous month 50%, right? It's simple, right? I'll start expecting, we got data that says when we're below NFP Friday and previous month 50%, 50% of the daily candles are green, 50% of them are red. There's no real edge there. Unlike when we're above previous month 50% and we're above NFP Friday, 70% of the daily candles are green and 30% of them are red. And most of the time, that's 70% of the time, the low of the day comes at 1800, 03, or 930 at 1030. And then swap to 30%, the high of the days come 1800, 03, 930 at 1030, right? So we get below this previous month 50%, right? I'll start looking at quarterly lows, right? Which will be around this area, right? And I'm not expecting them to happen in a day, right? I'll just say the month of October does have probabilities of coming to grab these lows. And then for November, I'll see if we can rotate back up. And this is just a rotation, right? From, small caps over to growth, YM, or is it rotating wherever? It could be rotating out of gold, it could be rotating out of crude into the equities, whatever, right? But I'll be looking for whatever the range is for October for us to get above the NFP Friday and previous month 50% to see if we keep heading higher, right?
But with the candle science using Thursday and Friday, right? Some stats that we saw this morning when we did our wargaming at 5:30 is there's an 84% probability that the high will be below previous day, right? Obviously, today, looking at Friday, that's kind of common sense. But on these other days where we range and we do a lot of crazy, like we are in a normal market and we're not doing crazy anomaly days, right? That's where this becomes helpful. There's also an 83% probability that we close below previous day high, right? Now we're looking at the opening price, right, of Friday. There's a 65% chance that the high will be below it. And there's an 84% chance that the low will be below that, right? So coming down to look at the bottom, we see, right, there's a 68% chance that C3 high will be below this. Now, because of the range, right, like I'm thinking that's going to be a lot less. And I actually am anticipating, because it's a holiday, because we moved like we did overnight, then more than likely this will be an inside bar, right? But we see that there's not too much edge of 51% probability closing above settlement on Friday, right? So I'll probably go with the 51% and we're going to see, but right now we can see our extremes from previous day, right, is less likely to close anywhere in here or even get this high. And it's more likely that we play in this. But in reality, we might be in the daily range right now and we won't even take out the high or the low, the 3 a.m. high or low. And that's only happened where Asia and London put in the high day, low day 1.3% of the times in the last 25 years, right? And out of that 1.3% of the times, it all happened on a holiday after a news event, so ta-da, after a large ranging day. So ta-da, we're there, right? This might be the day that we do that, right? All right. So with that being said, moving on, right? Looking at a 12-hour, right? We can see that overnight, right? We fulfilled the MAE, MFE of the 12-hour, right? And the little edge that we have that we always execute on a Sunday night. That we usually have the mode to median at 1800, meaning that we're going to put the MAE in for the 1800 to 06 within the first 15 minutes. Well, that maintains truth because we put the low in for the 12-hour, just like we have over the last 50 Mondays, right? We put the low at 1800 and then we moved up the rest of the night, right? So that edge stayed. And now what we're trying to solve on the 12-hour is from 06 to 1600. Are we going to do a MAE move to MFE move, right? Which would look like this, right? Up to the MAE box and then down to the MFE box, right? Or are we going to do a shallow where we, from 6 to 8:30, we rip outside the MAE and we stay below it and we can't make it back to that 06 price. And then we just continue heading down to the MFE, right? This is more realistic. And as you can see, out of the last 50 Mondays, right, majority of them couldn't even make it to this 1800 low, right? From a price standpoint, right, and a distro standpoint, majority of them couldn't make it to this low. But then also you have to tell yourself, majority of the last Monday, 50 Mondays, didn't have the volatility that we're expecting, and volatility wasn't expanding like this. So we're going to keep that in the back of our mind. Right. All right. So now looking at what Asia and London did, right? Asia moved up and London moved down. So contradicting markets. So we don't have a trend either way. Right? We don't have a trend either way. So usually, and we've got long, right? So now we're going to go over to the daily profile and we're going to start putting in, we're going to go to NQ. We're going to reset filter. We know that Asia was long true. We know that London was long false. And now we're going to see, and they're both none. So we're going to look for the probabilities of London OU and Asia OU, right? But before we do that, if we look at New York 1, right? There's a 63% probability that we turn false. There's a 36% probability that we turn true, right? So if we come over to the false, right, and start doing our analysis, we can see, looking at Asia OU and London OU, right, we can see that London OU has an 89% probability of being broken. However, that 89% majority of it happens by 8:30. So at this point, we're in the anomaly land of London OU getting hit, right? So we can't put too much weight on it. We see that Asia OU, which is below us, London OU is above us, Asia OU is below us, right? Has an 87% probability, which is high probability, but the same, right? Like it has a lower probability of getting hit between 9:30 and 10:30, right? So we can see that we're not going to gain edge from this, right? That either one can be hit, but we're more likely to lean on the Asia OU getting hit because we more than likely 63% of the time we go long false, and it's already showing characteristics of that, right? If we take off, oh shoot, I forgot to put on long. All right, we're gonna have to redo that, right? And it's the same thing, right? Cool. All right, if we take off long, right, we can see that there's a little bit more umph to that London OU getting hit, right? Because we're in an index that goes up in the right. If we go long true, there's a lot more umph between 9:30 and 10 o'clock of that London OU, and there's a lot less probability of that Asia getting hit, right? This is where understanding how to line up stats with live markets, and you always have to, first and foremost, be able to read a live market, right? So we can see, even if we do a long false, that 1800 low of the day holds, but we more than likely would put a 9:30 to 9:45 high day in, right? I'm not going to use the price because all of these got blown out because of the range, right? Because we're in an anomaly price behavior. So like these don't matter at this point, right? We can still utilize the time aspect of things, right? All right, coming over to the P12, previous 12 hour from 18 to 06 levels, they have a high, low, and mid. We can see that we met the criteria of hitting the P12 mid 86% of the time between 6 and 8:30, right? Right. If we go with the false, we can see that 76% of the time, right, 68% of the time, the P12 high gets hit between 9:30 and 9:45, and 76% of the time, the low gets hit between 9:30 and 9:45. Right. So this is a market that is telling us clear as day, right? You got to wait for live price to tell you what it wants to do. Yes, we have higher probabilities of hitting this low and continuing up, right? But we just saw that even on a long false day, we like to make a new high day between 9:30 and 9:45, right? And then we like to make a new low day, low days in, right? And so now we're going to have to accept that, right? So how we're going to engage this, I'm more than likely not going to trade the 9:30 open, boring me, right? Unless it's stupid obvious, right? So what we're going to do is we're going to see, does price net off of here to turn false, the London OU to come on down, or does it make a new high day and then reverses between 9:30 and 10 o'clock, right, to turn this thing false, right? Now, to give you realistic expectations, right, this is a 1 minute candle. This is a 1 minute candle that put 54 handles in. We know that normal 1 minute candles don't put 54 handles in. If there's a 1 minute over time, so we know that volatility is expanding, and this is the reason why we need to shift our position sizing down and bring in our TPs, right? The London OU, right, that's 162 handles. You can see over the last 16 weeks, right, the last quarter. All right, let me get my indicators to load up. La, la, la. This is that range that we talked about in Wargaming today. And remember, at 5:30 in the morning, it even pointed to range until 9:30, do a long fall signature in the day lower. right? So we're seeing that live price is doing with that. So for me, like, I'm not going to engage too much with longs, period. But for me, like, I'm going to see, can we rotate here? And then, like, during 9:30 to 9:45, can we get above 10 basis points? I have no doubt in my mind that we will, but I will be looking for the rotation back down. And then once we get below 9:30, I will take 10 basis points off the sells. And then, like, I'm going to push my trades to the right around 10 or the 11 o'clock hour, because right now we're at data risk, right, and price risk. So it makes more sense to, like, push your trades to the right to get as much data on these hourly candles as possible before having to press the button, right? But I am going to say, like, I am expecting for us to come up and then to come back down after 9:30, right? And so that's what I'm looking for. And, like, longs are off the table today for me, right? Unless it's at 11 o'clock and we've got 9 o'clock, 10 o'clock stacking on top of 9, and then 11 has got an 05 box breakout side. More than likely, the longs and we're above P12 high, longs will be off the table. I'll be engaging with shorts. The only way I'm going to engage with shorts, and let's talk about this, right? This is going to represent the 9 o'clock hour, right? Right. So this would be the low. This would be the high. This would be the 50%. We'll draw a 9:30 box. This will represent the 9:30 candle. All right. What I will do as we go up, right? I have 4 steps that I look for, right? Like, I don't mind starting to take a position. Step 1, get below 9:30. Step 2, get below 9 o'clock's 50%. Step 3, 10 o'clock takes out 9 o'clock's low. And then step 4 establishes a 10 o'clock Q1 high. Right? If you're in the boot camp, you know what that looks like. But I don't mind starting that position, starting to take positions, selling for 10 basis points or 10 handles, whichever one the market gives me fastest. Oh, I mean, 10 basis points is what I'm shooting for. Once we get below 9:30, right? So I'll let it rip up. I'll just watch and smile. And if it continues to rip up and can't get back below 9:30's low, then I just more than likely won't even trade until 11 o'clock 05 breakout to the upside, and it'll be for cash flow only. But if we do the reversal, which is the more higher probability, right, that would be the criteria that I look for, right? And then 10 o'clock 05 breakouts to the downside. I'm not trading Captain Backtest, only trend-like models. Today's a pure cash flow trade for me. I don't plan on taking more than like 2 trades. If 9:30 does come out the gate selling, then I will take the 9:30 breakout, depending on how close to this 9:30 and what my risk looks like, right? So how big the 9:30 1-minute candle, if it's more than 15 basis points, more than likely I'll have to force myself to wait for me to sell on the 50% or the 75 or the 25. I won't take the breakout. If it's smaller, like 0.15 and below, then I can take the breakout, place my stop, my risk above the 9:30 high, take it with the 10 basis points and move on with my day. But that's what I'm seeing, Austin. That's my game plan. And honestly, listen, like, Austin can contest to this. I'll contest to this, right? Even though banks are closed, the majority of the operations between the executing brokers, the clearing brokers, and the prime brokers and collateral margin are off today. The price will still move. Liquidity is huge. The rent or volatility is huge, right? Like, and it's not worth my exposure, because guess what? Our job isn't to give a fuck about what the big players who trade multiple billions of dollars or millions of dollars are doing. Our job is to lose small and gracefully, and not big and obnoxious, and to be able to identify the days where it's going to force us to lose big and obnoxious, and the day meets all the criterias. First, we have to lose big and obnoxious. So think of it like this: if I'm on the battlefield, and my vets will understand this analogy, and everybody should. If I'm on the battlefield, right, there's something that's called I'm up, he sees me, I'm down, right? I'm up, he sees me, I'm down. And legit, as fast as I said it, you should be, if you're moving to assault an element, you should be running, I'm up, he sees me, I'm down, getting behind cover, right? Now, if you're getting shot at and you're trying to advance a bad guy, right, who's shooting at you from a rooftop, right, and he's actively shooting at you, you are going to think, I'm up, he sees me, I'm down. And you're going to prioritize shooting back and taking cover as fast as you can. Take 2 steps forward, shoot back, move behind cover. Roll left, roll right, reposition yourself, and keep advancing, right, that way. when nobody's shooting at you, right? You can just walk down the alleyway and just be on alert, right? Like you don't have to care about the cover. Same thing goes in trading. I would rather take my losses in a normal market. Like the enemy's shooting at us right now. You can tell by the range. We had a 50 handle, 1 minute candle, right? Like, so I'm not worried about taking trades on this day when the enemy's shooting at me. If I can shoot back and hit them, cool. But like, I will limit my trades. I'll reduce position sizing. I'm very alert and aware that, hey, this isn't the day to fuck around and find out, right? Like, this is not the day. And so I'm very aware of that. All right, Austin, back to you.
Yeah, we got that 9 o'clock candle, literally just instant 67 points. Crazy.
Now imagine if you were short for the 2 minis, you just blew your profit counts.
Yeah. Yep. Nah, dude, but we're precision, right? Precision. We snipe these highs and lows. We don't do that. That doesn't happen to us. Yeah, guys, we're starting to kind of, you guys kind of, I'm going to make a little short video because I want you guys to also see this, and you can go back and watch the small version instead of having to watch the whole recording. But if you guys didn't notice, Mickey and I both spoke the same language, just small different little nuances of how we got to the same conclusion, to where, to summarize the move that him and I both want to put risk behind, new high of day at market open with the break below. Because right now we have a long New York 1. Jeff even shouted out there in chat. Appreciate you saying that, Jeff. And for those of you that don't know what a long New York 1 is, we just took the high here. And so now we have a high probability of taking this low that we made at 730. In addition to all of that, we have all these statistics here stacking up to the downside. We took a lot of stats to the upside. The only thing we have left is this 4 a.m. open. We did take the London OU. And now we have the P12 midnight open, 1, 2, 3, 4 bearish levels to the downside. Obviously, Asia OU as well. We go broken more than we don't in Asia. So we got this box of probabilities, basically. If we want to highlight the highest to the lowest point where price could, if we're going to mean revert, this is the area of potential mean reversion, this box. And so if market open comes up, makes an in statistic high of day, breaks to the downside, I will put some risk behind this short, trying to get a portion back to where, and again, like Mickey was even saying, like, look at this, like, dude, the volatility is so high. I'm saying extended cash flow short, and this is 0.3%. I mean, it's almost 200 points to get to the rest, to the to all these statistics to the downside. So this, it's either going to be I'm only going to be trading one account. Typically, I'll trade 2 to 3 to start out, and then scale up from there, where I'll take maybe 2 accounts, copy trade them. Then if I take another trade, I'll add a 3rd account to it to cycle my portfolio. That's how I like to diversify my risk with these prop accounts. But in a day like today, where the volatility is high, there's a lot more things going against me than for me in terms of just the environment. I'm going to reduce my risk. And so first and foremost, if I don't see what I'm trying to war game and the market is just giving me a completely different story, I'm just going to sit out, because if I can't define my risk, I can't do that, right? But if it does, I'm going to do lower position sizing with a potential short, and yeah, only one account.
Let me get the screen back real quick. They kind of show, like, so this is a good visual representation of what statistically we do, right? More than like, we got the red pill and the green pill. The red pill is that we put the high in, which very much can be in right now, that this is the high for the 9 o'clock hour, and then for 10 o'clock to keep heading lower, and then start thinking, and the Q1 quarterlies, they'd be respected. Quarterly 15 minutes, meaning 4 15-minute red candles, go down into the right 15-minute candles, and then wait for 11 o'clock to pull back. Or we do this action right here, where it's, we rip higher, make that new high, and then we reverse, right? And then we spend 10 o'clock move distributing downwards, and then 11 o'clock retrace, right? One thing I was showing you guys, like, this is, and let me turn this off. This is what we were looking at right this morning. So we took Friday's price action, right? This is to represent a drop. And then we could see that Asia was supposed to be bullish, and then London was long false. Oh my gosh, and now it's freaking glitching, right? So we saw that based off of what Asia and London did, right? Expect a range and then expect a pop higher. And then this is showing us, because this is 5 minute and 1 minute data, like combined. You know, I don't know how the nerds do it, but they do a great job doing it. But this is even pointing to like 9:30 pop higher, and then start reversing around 9:50, right? And then start coming down, right? So this is the move that we're hunting right now. It looks a lot cleaner on here, but you just got to understand that, like, this little pop up can extend all the way to 10 o'clock before this actual drop happens, right? And that's why we try to represent it here. Now, if we put long into this and then false, right? Let's go long first. Right, you can see that reversal happens around 9:50. If we go false with New York 1, right, then it pushes to 9:30 exactly, and then the retrace happens. So 9:30 is up here. If we drop down, 9:45 retraces, and then we sell off, right?
Dude, I really like that layout.
Oh, me too, man. This will eventually make it on over. Right now, you already understand we're dealing with freaking trying to converge yesterday's data and the day before data with merging today. And there's a lot of, it seems like an easy concept, but the 1800 and defining that yesterday was different in code is a little bit more difficult. Now, this is what we're going to look for. This is where we are completely wrong and we won't take any trades, right? 9:30 goes higher, and then the 15-minute candles just stack higher. 10 o'clock takes out 9 o'clock, and we just keep going in 15-minute structure up. This is where, like, I will personally take a long out of the 05 box for 10 handles, but it won't happen until 11 o'clock. I'm giving myself enough time and space for the market to convince me that, hey, dummy, the obvious trade is the up. And then, even then, I'm very aware that I'm only taking it for cash flow. So this would be the only probability that I take a long. And guess what? Like, I know that's not what people want to hear. I know that's not what Twitter promotes, but I'm thinking about the next 100 to 1,000 trades and surviving an account for that long, right? So I am very, very clean and very concise about what trades that are mine to take. And I don't want to be the dude slinging one trade for 100 handles. I'm okay with being the dude that slings the next 100 to 1,000 trades for 1,000 handles without any jeopardy of getting blown up, right? And that's just me. But yeah. So going back to this, right? Like long true. Sorry, clicked the wrong one. Long true, like obviously we get above 9:30 and we never turn back, and we can't get below 9 o'clock 50%, and it's just clean 15-minute candles up. That very much can be the case, right? Like if we go back and we look at our statistics, that does happen. It actually happens 37% of the time. So if we think of this in a 5-week structure, a 5-day structure, not saying it, these variables happen 5 days in a row, but let's say they did happen the same way for 5 days. 1 to 2 of those days would represent the true. The rest 3 to 4 would represent the false. So hopefully that gave you guys some light bulb moments. All right.
I'm going to be pretty heartbroken, and you'll hear an audible cry if we just have if we just at market open do one of these little jobs right here where we open up and then just go doot in 1 minute.
Yeah.
They're like, all right, guys, well, the stream is over. Hope you guys have a great rest of your day.
Well, the biggest thing I'm worried about is how big the 9:30 range is. Right? Like that's going to be, like I said, I'm not, even if we have one bigger than 15 basis points, if it's bigger than 15 basis points, I have to force myself to sell green candles in the 9:30 range around 50 to 75. And that's that, right? Like, but if it's less than 15 basis points, then I can get the luxury of selling the breakouts, right? And then they can go. I think that's one tweak that I'm going to start that I've been testing. And obviously we got, okay, so huge shot, man, I can't speak highly enough about this gunship. And listen, this gunship can be tailored to any style of trading, whether you're a scalper for 15 handles or whether you're the dude that wants to capture it from MFE to MAE to MFE on a directional day, man. Like, I can't promote it enough, and I want you to explain to the audience what that is and what the future of the gunship looks like.
Yeah, appreciate it. Let me turn this off. So here is a cool little. So this is first time seeing this. Actually, I think we talked about this on the call, but this is every gunship move overnight. I'll turn this off so you guys can just purely see the probable price movement. We'll make this one. Everything should be set to 0.3. Except for these two. Okay, cool. So all the gunship is, in a very simplified way, is high probable price movements of the fluctuations of the daily candle. So starting at 1800 all the way until 1600 when market closes, we have a lot of very repeatable movements that this daily candle loves to consistently create. Kind of like the midnight open retracement. That's just one singular move, right? From 8 to noon, this daily candle, as this daily candle's wiggling and bouncing up, bouncing down, all this stuff, it makes this retracement to midnight open 65 to 68% of the time. And from a higher time frame perspective, all that is just the daily candle. You know, in this case here, if midnight opens below, it's doing this. Oh, and then maybe it either continues doing this or it retraces to midnight open and continues maybe starting to try to form a bearish candle, whatever. But either way, we as day traders, we're trying to capture that, right? We're trying to capture this daily candle just bouncing, and we're trying to get a fluctuation of that move. And so after trading the midnight open for so long, you know, it started getting to me like, dude, there is a very consistent cash flow move that I'm capturing of just that retracement. There has to be other quantifiable moves that this daily candle, when it's fluctuating and trying to decide whether it wants to be bullish or bearish for the day, where it wants the wick to be, where it wants to close, all these high repeatable things. I wonder if there's a way to quantify more of it to where it's more of like from bell to bell, we can find moves that are kind of like handshakes, where starting at 1800, there's a consistent move that then handshakes over into London, that then handshakes over into the beginning of New York, that then handshakes over into New York, that then handshakes over into the PM session, and then bleeds into the next day and just rinse and repeat. And so that's kind of what the gunship here is it's made to show you high probable price movement environments that you can then structure trades with a high probability of a direction. So if I know that midnight open, which is this yellow line here, in a very simple example, if this yellow line is midnight open and price is currently above it, and then we know that between 8, this time period here, 8 to noon, this is the time where there's a very high probability that we're going to come back here, then this is an overall intended direction. And then as a cash flow driven trader, I just want a portion towards this overall intended direction. So what I can do is I can manipulate the statistics in my favor to where if I know that this overall area is 65 to 68% of the time going to get hit, but then I enter somewhere here and I'm just trying to get the catalyst. I'm just trying to get the highest potential move of the overall move with positive risk management. Then I should be able to do the same thing for other moments of the day and other portions of the day. And that's what you see here is these green lines and green dotted lines. These are average and median favorable price movement. And then the red lines, if I highlight them, it's the opposite. It's the median and the average adverse price movement, MAE. So favorable price movement, meaning favorable. So if it's long, it's going to be up. If it's short, it's going to be down. And then vice versa. MAE is basically the typical drawdown. And so what we can see here now, it's kind of like the anatomy. Like if we were to put a daily candle in a CT machine or an X-ray machine, whatever, and we wanted to see the anatomy of this daily candle, the typical healthy reference ranges. Just like I'm a lab tech, guys. If you don't know me, that's what I did in the Army. So I'm a nerd. I like to put things in ranges, and I like to see that if something is in a normal range versus out, whatever. That's kind of what we see here. This is a normal reference range of a significant portion of time that we then can get a high probable direction, just like this example here. And then if I'm a scalper and I just want 10, 20 points towards the overall move, if I am a reversal trader and we now take the move to the upside and I'm now trying to anticipate the move to the downside, if I'm a trader of a continuation trend-based trader and I want to see how to get in with the overall trend, and the gunships is showing me that we have favorable price movements here, well, then there's a way to get in. Like, there's so many different ways that you can use this to just give you high probable trade ideas. And the overall goal is to just give you that environment. It's just like telling you a weather report. Starting here, you have an X chance, right? Like, you check your weather app. Oh, it's going to be rainy out. Let me put my coat on. Here, you know that there's a high probability of going to this cluster of green lines. And then if we do take on adverse price movement to this high probability direction, we're most likely at median and average going to come to this red line. And so then you can structure trades or structure your risk or however you want based off of just objective data. And so that's what the gunship is.
Yeah, man.
And this is what we did overnight. Like, this was the Asia move. So we came down a little bit, came close to the median and average, then came up to the median and average favorable price movement here. This is the London move here. This is the 3 a.m. transfer move. So the transfer back to the 1800. And then now we're just waiting for market open.
Okay, so while we wait for market open, I can talk about a couple of things. So, like, one study that I've been doing, and I'm trying to pull up the picture, but it looks like crap, right? So, like, let's see how I can do this where it's a little bit clearer. I'll read off because I know that's blurry, right? So this is our 6 to 9 range, right? And I looked at the last 3 years worth of data, right? And I found, like, with any time-based range, right, it's going to have the probability that it stays above or the probability that it goes above and goes below, or vice versa to the downside. And the fascinating thing, so I have this defined as breakout MAE, breakout MAE, MFE, breakout MAE, and when the highest probable reversal is for that, to start incorporating the reversal MFE, MAE, right? And so taking the 6 to 9 range between 0 and 15 basis points to the upside is the highest probable reversal, but it should be met with, and then but it goes all the way up to 30 basis points. So anywhere between 0 and 30, obviously use some common sense. If we break out, like currently the NASDAQ has broken out 0.5 basis points and then reversed, right? So this is higher probability than for a reversal than if we went to 0.3 and then put the MA in, right? So now what we can see, right? Now we incorporate breakout MAE data. And what we can see is once we get below 0.25 basis points off of the pivot, right? That's the highest probability that you are hitting reversal to hit the other side of this range, and you can incorporate the reverse MFE to the downside, right? And so what I find fascinating right now is we went 5 basis points above the 6 to 9 range, which is this high right here. And then we started the MAE for the breakout, and we have not hit the 25 basis point that would be represented here that says it's more likely to hit the other side of this range, which would put us below P12 mid than not. So, like, we're starting to see the possible red pill. Remember I told you about the difference between, let me make sure this is set up right, long false, right? We're starting to see that the red pill is starting to creep in for a possible sell-off, right? And then if that's the case, 930 will open up and just completely sell. If we still need to do this, we have not hit that 25 MAE yet, so we can't consider, we still have to favor the breakout to the upside and get higher above the 6 to 9 range. But that's the project that I'm working on right now. And it's just pretty cool to watch in the live markets. And that's the reason I'm working on that project is because we know the red pill does happen, and I'm trying to put some kind of quantifiable MFE data to solidify it. But majority of the time, the green pill happens.
I think we should call it the green and red Kool-Aid. I don't like calling it the pill. I think the Kool-Aid's more fitting for this environment.
Oh yeah.
I want to ask people every single day which flavor of Kool-Aid are we drinking?
Well, we're in a market that can be controlled through statistics majority of the time. So we're in the matrix.
It's true. The VVIX expands over a tweet.
All right.
Actually 2 seconds. Now 1 minute.
Wait, what? Oh my gosh. I was like 2 seconds. Wait, what happened?
2 seconds for then the 1 minute countdown.
Yeah.
All right, guys, to get very focused. No, I'm joking.
All right, so we hit that 25 basis point MAE. So now we're going to wait for live price to confirm. 930 should sell off, right? We should get breaks below the 930. We should not make it 10 basis points above for that to be the trigger to hit the other side of the 69 range, which lines up with the short that me and Austin will take. Very beautiful.
Yeah, as long as I can define risk, guys, the two things going into this, we got 20 seconds. If I can define my risk with market, if the market open is this ginormous range, that's already number one. I'm not even gonna be looking. But if I can define my risk, and I can get my targets to at a minimum the cash flow to get this long false and these stats, I'll take this short all day.
All right, and we're open, and there's the sell off. Let's see if we can get follow through. 13 basis points now, so still pretty good range.
First 20 seconds already 30 points. Oh man, I'm getting scared.
Remember that P12 high has a higher probability to make a new high a day. So I'm hating the fact that we started selling off, because that means I'm gonna have to wait. Pretty strong. So it's 15 basis points now. Got to check on ES.
Heck yeah. That's a good range.
Yep. All right, let's go.
And
we're right at 15. We're right at 15 basis point. That's fun.
All right, so depending on how this candle closes, guys, I'll be trying to form my target around 745, 746 area. See what percentage that is off the break. I will not be looking for a break to the upside. If this breaks to the upside, this can go without me. The major move that I want to.
Yes, is moving up. YM's moving up. Russell's 2% up for the day. Remember, we're supposed to make a new high a day, so there's that. NQ's lagging, right?
Yeah. This is one of the weaknesses that I don't really like to trade, because that high of day is a good potential, but then we're also in between a good potential of a mean reversion to these stats here. You know what I mean? And so I don't like to take this long to get chopped up. I just want to get that clean move, and if I don't get that clean move, I'm not interested in longing this.
Yep. Nope.
I want to see the mean reversion first before we long. And if the market doesn't give me what I don't want to see, I don't trade.
All right, here we go.
I need to put a timer. It'd be dope if Restream had like a timer, and I could just tell it to switch back and forth to our screens like every minute.
All right, so the NQ was so weak they couldn't even take out the previous 5-minute high, right? Couldn't get above 6 o'clock price, so that's all great for the shorts that we're about to take. Let's see though. We just swipe below 930. Come on, don't hit that 10 basis points yet. Oh.
I told you, you guys are going to hear audible tears if we just get this instant swipe. Because sometimes it does happen.
Suck back into the range. Come on, you. Come on. We got 27 seconds. Let's see how far we are off of this. 15 handles. Damn. All right. Look.
All right, I'm short.
Noise. I'll let you know when I'm in.
Okay. I'm taking this short, guys, taking my target right here to these levels for a long fall at 737.25 will be my target.
I'm short 3. I will not be that ballsy. Let's go to P12 mid. Right.
Ballsy? What do you mean?
You said 737. I'll go to P12 mid. Right. Like, so mine's.
That's closer. What do you mean ballsy?
Wait. You said 737.
737 is closer than the P12 mid 713.
P12 mid is 744, dude. All right. I need to go in and screenshot this.
What? No. Dude,
wait, are we
check
looking
your
at the same
P12
chart?
mid. Check your P12 mid.
Yeah, it says 744.
What the? Mine says 713. Am I crazy, guys? This is P12 mid.
You're crazy, bro. All
Well,
right, let me
I'm
set
holding.
TP real quick.
All
right, TP. Fucking Christ.
I don't know why. Oh, it's MNQ. MNQ is different than NQ.
Yeah, you only operate. All right, drop in it in the chat. Verify that I shorted. I'm already out of that position. And now I'll wait for the 10 o'clock 05 breakouts. Oh, what's up? Yes, you couldn't make it above 10 basis points, could you? Sad.
You know why? Let's go, baby! Woo!
The only thing that can stop me is me. If you're doing this for the women
you hit TP?
Yes, sir.
Let's go.
I do this shit for myself. They not like us. And they know that. They not like us.
Let's go, baby.
And I did it all for 3 micros. Oh my god. I made like $400 off of 3 micros. Oh my god.
You're not even confident in your edge? Oh my god. Shut the fuck up.
You actually consider risk? You actually consider risk? You don't gamble prop accounts? Oh my god. Fucking pussies.
Yeah, guys. This was the trades of the week. Guys, this was trades of the week right here. Hold on.
Do not ask me to trade it live. Do not ask for my weekly account statements or my monthly or my quarterlies. But just trust me. This is we took it.
This was
don't ask for executions. Do not ask for executions because you'll see 1,000 executions.
Trades of the stream, guys. If you ask me, if you saying I'm lying, you're just hating. Trades of the stream. This was the trades of the stream. You could have taken all these.
Yep.
We just took this one though. Did you take it though? No. Well, you'll see.
Whoa. I
was busy.
Thinking about buying a checking account and saving account is it takes a while, All
right, ladies and gentlemen, who got that short in the chat? Let's freaking go. You didn't hear audible tears, Danny. Yeah, my bad, guys, for the P12 thing. I didn't know if obviously I was like, well, I didn't want Mickey to mess up his trade because I was like, dude, I'm looking at P12 mid right here. It's 713, and I didn't want him to like overshoot. But then, yeah, so it's in queue. That's what it was. It was just a discrepancy.
All right, so we're not slowing down. We're below 10 basis points. We've swiped below the 930. This is setting up for a trend day DMP DWP that can change within the next 20 minutes. Right, remember we wait for 10 o'clock. If we swipe this 930, or if we come test it again, that's more likely to be a range one day. But right now, we're below 10 basis points. We're rejecting the P12 mid area, so we'll wait for the next 15 minutes to confirm if this is true momentum down for the rest of the day. I just checked. Dude, they don't close the markets early.
Yeah, today's normal. It's just the bond market is closed.
You know what that means, right?
What's that mean?
We can play all day.
Does that mean that I love that it's like right at the beginning, so I can use it as a soundboard.
Okay, if you're new here, let's talk about some of the comments that were made, all right? So listen, like, we have been attacked by people that are like, statistics are stupid. But it's like, are you stupid? Because statistics will just prove that your strategy works or doesn't work. We have been attacked because we're good at managing risk, position sizing, our risk per trade. It's not like we go out looking for a fight, right? We just do the same thing over and over and over again. We don't even talk to these other communities. And it's like, then we did our research and we saw that majority of the people talking shit were buying hundreds of prop accounts and only showing their users the ones that were winning. We saw majority of those communities were just cherry picking trades, would not show executions. And when we did finally see executions, it was like a machine gun took a leak on the chart, right? So like, we're not here to make money. Guess what? Yes, I charge $100 for the boot camp to pay the developers who build Candle Science, who build the daily profile and soon to be the journaling. For the algo that we do, these people need to get paid, right? And because like when I did do it for 4 years for free, I got scum of the earth that didn't take it serious, right? So, but we trade it live every single week from 3 o'clock from London all the way until like 1600. We got somebody trading live, right? Being transparent, trading the same thing, saying what their game plan is before they take the trade, just like you saw me and Austin do today, showing the executions live. We're not afraid to show month over month statement of the same fucking account. Like, we're just sick of the bullshit of the lemon lot salesmen that's out there that are scamming, bluntly scamming you guys right in front of your face, and you know better. So we're just trying to show what right looks like. So like when we get arrogant and we make those stupid comments, there is a reason why. And we're not the best traders. Guess what? You will never see me and Austin top tick and bottom tick markets and run trade. There's sometimes that we'll trade 100 handle moves, but the conditions the market environment and the volatility conditions have to line up perfectly. Out of 1 week of the trading week, in 1 week, I will take 90% base hits and maybe, if I'm lucky, a 10% home run trade where I capture the high of the day, low of the day, and run it to the other side. But that's the reality. All we try to do is promote realistic expectations and responsible growth mentality, right? So if you're not here to look for that, then we aren't the trading community for you. If you are, and you want to see a repeatable workflow that can define the risk profile that does not hide anything from you, join the boot camp. It's $100 for 3 months. And it's 3 months because I sit there and drill you with the same information over and over and over again. I never change it. So there you go.
And there's the QR code on the top left. And, you know, just going back to the statistics thing, I like to be a little cocky about this stuff only because exactly what Mickey said, people People just love to talk shit, and it's like you're literally just quantifying that your edge has a reasonable, measurable move. That's it. Just like you guys know what I'm doing right now. I'm in the market to buy a house. Did I just go on Zillow and say, "Oh, this house looks good. This house." No. What did I do? I ran the numbers. I said, "Okay, well, this house is selling for this. What did the house with the same bed, bath count, and square footage sell for roughly? What did this do? What did this do? What did this do?" What did I do? I pulled the data. I pulled the numbers. I looked at the statistics of the comparable area and seen that this is or this isn't a good purchase. We use numbers and statistics. We use numbers when you go to the hospital. How do you think a doctor is able to diagnose you properly? Because a lab tech ran your results, and within the statistical range of your blood work, you came back good or bad.
And
Statistics.
guess what? They can grade. They
thing.
grade you. They grade your condition. Like, is this serious, or is this just something that we like? What that he can drink water and take ibuprofen and get over, right? We do the same thing, right? In trading, it's all about grading, putting an expected value, a profit factor, whatever you use to say, hey, this is a high probability setup, right? This is not a high probability. This is cash flow based hit style day, right? Like you do this same thing in every other industry, but people don't teach you that in trading because it's not cool, and most people won't put the work in required.
Heck yeah, bro. Good trade this morning. You took that short from the rejection?
Of 9:30, yeah. I posted it in Discord.
Yeah, and sorry for the quality. I've gotten a couple people say the quality's low. It's just the restream limitations. And honestly, guys, like we only do this once on Monday, and then on Fridays it's just analysis. So do apologize, but it doesn't really make sense to upgrade for a small amount of time we're on here. We're primarily in the Discord with the community, and so we're not here to look flashy. Like, we're here to trade, right? Like, at the end of the day, you guys can see and hear the basic premise of what we're doing. we're here to trade. We're not here to look pretty and have a pristine, go to some other stream and watch them take 700 trades and go crazy. If you want to see that.
Market brain. Okay, so we don't listen, we aren't those people. We shoot for cash flow, right? Like,
you'll see this candle, by the way. Look at that.
Yeah, it's a new 15-minute. We rejected the 9:30.50, but we're still set up for a range style day. Yeah, it is. So we're not we have traders, plenty of traders in the room that sling large size with precision, like Drez, Eldionis, Carl, Masking, right? They can pull $4,500 out of the day like nobody's business, right? I'm not that dude. Austin's not that dude. We're okay with making 500 to 1,000 a day. And then on our business expensive days, just like hemorrhaging the bleeding, right? Because at the end of the day, for me, I don't know, Austin, you can speak on this. It's not about like making as much money as I can in the market on one day. It's about making enough money in one day that adds and compounds through time, right? Because I'm a firm believer, and I do not increase my position size unless the account size accounts for it, right? And the bad thing with these profit counts, which I'm learning about, is like it forces you already to increase your position size, the risk per trade that's about 10 to 20% anyway, right? Based off of the max drawdown that you can have, and that just doesn't sit with me well. But then that's because I traded live accounts so long that I'm used to trading 2.5% risk per trade and 5 on really good trades.
I think that one of the most powerful words in the English dictionary is enough, because that's exactly what trading can give you. Is if you guys trade with the sense of just, that's enough. Like, this is enough for me. That's edge in and of itself. Like, this move right here, we spent every single time we do these just one and done trades. I like to and again, I just want to put this out there. We go over and we're still just as in depth when we lose too, but when we have a day like today where it's just one and done, very easy, we spent this entire morning starting at 8 a.m. Usually that's when I start my wargaming, around 8:30. We spent an hour and a half stalking this move, looking at every potential scenario. And then if the market aligns with scenario we want, we execute. You guys heard me all the way back here when the market opened. Let me share my screen real quick. If we broke to the upside, listen, we could have pumped to the moon, and I would have happily just watched it go without me. But if we broke to the downside, this is why I give myself different scenarios. If you guys follow me on Twitter, I share this where I'll give an analysis and then trade ideas. Analysis, trade ideas. If you guys are watching from the pack, by the way, drop your trades in the chat. I'm going to shout you guys out here in a minute. But the reason why I do that is I'm not just trying to account for every little wiggle in the chart to just try to take every single trade. What I'm trying to do is account for high probable setups. And then if none of them align, I get to live in an abundance mindset that, okay, I'm good. Nothing set up in my favor. I'm happy with just calling it. But if it does set up, if a move does align where I'm like, okay, well now if we break below market open and I can fit a cash flow target towards this long fall scenario of taking this low, I'm taking it. You guys seen just that. If that I have no permission to hesitate, because that is a killer with people's edges, is they will hesitate. When the move finally sets up, they'll hesitate because they're scared of losing. I don't have to hesitate because I planned for this move all the way back here. This move has already been written, and I just have to let the market make it. I have to let the market say, yes, you were correct. Or the other side of the coin, which still also happens, no, you're wrong, and you need to just be out of the market and not have to do anything. I'm not preparing to win. Every trade that you guys see Mickey and I take, we're not trading to win. We're trading to be good losers. We're trading to say, if we don't even turn false here and we just break to the downside a little bit, then start turning over, we're losing against the winning team. We're losing against the highest probable outcome, which is at a minimum turning false, at a minimum taking these statistics here that have 8, 70, 80, 90% attached to them. We're taking out the high probable 80% statistic of taking this P12 mid. And you're seeing this even today. Look, the highest overall intended direction was this P12 mid. This P12 mid has around an 80 to 85% probability historically, depending on your sample size, of being hit for NASDAQ. And look, if you were targeting the overall move, you would have gotten stopped out just now. If you were targeting this entire extension of the overall intended direction, you would have gotten stopped out. But if you targeted enough, back to the point Mickey was making, if you target a portion, if you target the cash flow, the low-hanging fruit, the highest of the highest consistent possible price movement towards the overall high probable direction, you can make money being wrong. I had the overall idea we were going to go all the way to P12 mid right here. And if I were to have traded my idea, I would have been wrong. So I want to shout out some pack members here real quick. So I'm going to share my full screen.
While you do that, I'm getting coffee. I'm going to go mute.
Give me some coffee too. Drive all the way over here.
All right.
Let's see here. We got Zulu. Shout out to Zulu. Zulu got some done on the funded cash flow on the day. We got PT motherfreaking FX. Oh my God. Are you still in this long? Oh my God. Look at this monster. Look at this. Bottom tick. You guys want to see somebody that actually bottom ticks and top ticks moves and can do it live and show you guys and does it right in the Discord? This dude, PTFX. Look him up on Twitter. Same handle. PTF freaking PT. You need to put a lowercase MF here.
The cool thing is that's the same. He takes that same trade every day.
Yeah.
The 945 reversal. Beauty.
Beautiful freaking golly. Still riding that bad boy. We got Tai Fong in the house. What's up, Tai Fong? Tai Fong took that beautiful short. We got Chitaki. I really wish people could post pictures in the YouTube chat. That'd be dope. YouTube. If you're listening, because I know we're the most popular. We're bumping right now. We got Twain, 1121 Twain. PTFX is still holding. He just tagged me. What's your target, dude? Because, man, you got if we netted here and if we're not coming back to P12 mid, that's a that's a good position for a potential P12 high. Oh my God. Beautiful trade, bro. We got OJ. OJ, dude, look at this. OJ has been in the group for so long now. Dude has diversified his risk. Look at this. Cash flow on 2 and above average cash flow on 2. This is great. Lower position sizing for today. Nice cash flowing Monday. Beautiful job, OJ. Beautiful freaking job, OJ. We got Carl. Carl took a beautiful short. Carl is one of our pre-New York Magic Hour traders, along with Drez and Eldianis. Drez and Eldianis. Let me see. Eldianis shared his. Missed the shorts, took my longs off the P12 mid reactions and swings. I am out walking. See you guys. Look at that. 338. Eldianis 338 times 2, and TradingView's not letting me paste it. He said, nope, we're not letting you. There we go. Shout out to Eldianis. There's his trade. Look at this, guys. And I'm sharing this stuff because we all, Mickey and I aren't the only ones taking this. We got Ben. I mean, we can keep going for days here. We got Ben in the house. 183. Running out of real estate here. We got Thor. What's up, Thor?
Let's go, Thor.
Thor's trading his funded account. 233. This is, I like to see this. Thor, I like to see.
Perfect.
He did.
That's how you get payouts.
I'm so proud of this dude. Making progress, bro. Making freaking.
And the cool thing about Thor is, listen, like every single time he breaks the rule, doesn't position size the right way, market open break setting up, or tries to jump to another strategy, the market smacks him in the face. And there's nothing more powerful than the market saying, hey, dude, this is your edge. Like, stick with it. Focus on this edge.
Yep.
It's happened to me so many times.
It's like the market knows when you change one rule. You add one additional contract you know you shouldn't. You extend when you know you shouldn't. You move your stop loss when you know you shouldn't. That's the time you're going to get so messed up.
That's why I like those wolf in trades, because they keep you honest.
Yeah.
Same with the midnight retracement trade. Like, you can't try to get cheeky with it. It's going to make you pay for it every time, every single time.
Well,
I'd rather be precise with my risk profile than my actual entry. That's what matters. That's what matters.
Exactly. Dude, you said it perfect right there. Be precise in your risk, not your entry.
As you keep doing that, I just want to put it in, because we swiped so many times at 9:30, like we are setting up for a range 1 style day, daily classification. We'll see. Let's see how 10 o'clock plays out. If that is the higher probable daily classification, is the range 1 now. Especially if we break this 9 o'clock high, because then we went off track and we swiped the 9:30. So that's 2 statistics saying, hey, expect a range in day.
Oh, yeah. Yeah, we're about to.
Has absolutely nothing to do with what we did on Friday, neither, right? So with that being said, like now, like I'm still my job is to sell the rips. Like I don't buy the dips and sell the rips. I do one trade, one side a day, right? And so if we are going to do range one style days, right? Now that I've identified what's going on, right? I will wait for price to move, extend away from the 930 and take 10 handles back to the 930 off of Wolf Intra's 05 breaks, or yeah, those two are the ones I use. And it's just for 10 handles, but honestly, I don't even need to, right? I made my cash flow for the day, and now is a time where you have to ask yourself, is the edge that's going to keep you in the market, like, is the market environment, is the volatility environment worth you continuing trading, right? Is that edge more powerful than the first trade that you took, is the way I like to define it, right? Like, so the 930 trade that we took we had great edge on that. There's not much more edge that's going to beat that edge. So now I have to ask, and based off of how today's performing, now I have to ask myself, right, is the edge that I take at 10 o'clock to the 05 break, or Wolf Intra back to the 930, is that more powerful edge than the trade that I take at 930? Because if it's not, there's no reason for me to keep trading. And so the only way that is the case is if we keep pumping higher, 10 o'clock swipes, the 10 o'clock swipes 9 o'clock high, or we reject 9 o'clock's footprint and start heading down, and then I get a Wolf Intra. But there's not much out there that's going to get me back in the market today.
Yeah. Yeah, I'd say a bearish entry 8 off this P12 high would be pretty dope.
Yeah, man. Oh, shoot. I didn't even look at that. We're still far away from that. Never mind. Like, I'm not even... I'll wait for the 05 to set up. Yeah, I have no... You see, if you have to think about it, like, then more than likely you're done trading for the day.
Yeah. We got a question here. Dylan, what is the strategy you teach? So this is a good question, because this is one that we get a decent amount, and we don't teach a strategy. We teach a framework. We teach a way that you can structure however makes sense to you. And if you don't have anything that makes sense to you right now, because if you're a new trader and you're like, well, I don't even have a perception of price or a view on price that makes sense. Well, that's great too, because then you can you got to start somewhere. But if you already do, or if you already have a strategy, like if you're a support and resistance trader or an ICT trader or whatever, right? Like whatever strategy you're already coming from, but you're struggling to do it profitably, we provide a framework. We provide an objective framework that you can measure, quantify, test yourself, and you structure that around what already makes sense to your brain. So we go
think
from
of it like
all the way
this.
from
Yeah, go on.
well, we
No, I
go
was gonna
all the
say-
way from step one of just what is statistical based trading, because it is a very different and not something that a lot of people talk about in the normal space. So step one of just what it is, so you're understanding what we're talking about. And then we take you through all the way from marrying this with live price. So what statistics do we use? How do we structure that with where the highs and lows of days are, where potential checkpoints of price can be, all this stuff. So that way, then you can tailor what now makes sense to your brain, when you actually should get in long or when you should get in short with how you already execute. But now you have numbers of, okay, well, now I have high probability XYZ of happening to this point at this moment in time, and I can align it with how I already trade.
And one thing I'll add to that is like the daily profile is to allow you to understand like the market environment you're in. Are you trending? Are you reversing? Are you expecting a reversal because of high day, low day? Or are you ranging, right? And one thing that not enough people, so yeah, there are phase two, we teach you how to build risk profile off of trending models, off of ranging models, off of reversal models and all that, right? But it's more so to show you like the expectancy value, to teach you the expectancy value, the profit factor, how to build a proper risk profile, MA and MFE for stops and TPs, right? But we do teach you different models for trending markets, reversals, ranging markets, right? Now your job is to use the daily profile to identify what type of market environment you're in. And you learn from the first class that we range more intraday then we trend. There are days that we trend, absolutely. Maybe 1 to 2 of the days out of the week, we will trend between 9:30 and 16:15 if we're lucky, right? But 3 of the days, the 4 of the days of the week, we're going to range more, right? During intraday, right? Just like if you traded stocks and equities, you'll realize that any stock out there ranges more than it trends. As a matter of fact, 90% of it is more relevant in the stock world than it is anywhere else, where like 90% of a stock's life will be back and forth, and 10% of it will be moving up or down if they're failing as a company, right? That same edge transfers over to NQ during the intraday, right? So when you learn how to identify when to turn systems on and off. So like right now we are in a ranging market. We can already see the probabilities. It hasn't completely confirmed yet, but we are starting to get signatures of going into range intraday, meaning between now and 1600, we're more likely to touch this 930 than to move away from it, right? Now we line up live price with it. If 10 o'clock breaks out to the upside out of the 05 box and just keeps going, 11 o'clock keeps going, right? Then we're in a trending market and we need to turn off range style trades. But once live price confirms it, which is already started to, right? We know, hey, we need to turn off trend models, right? Number one, because we've already maxed out the daily distro and the New York 1 distro. And number two, right, we've already got 2 to 3 characteristics that say, hey, that are flashing, expect range 1 day, range 1 day. So now we know, like, we're going to turn off reversals because there's only 2 reversals that matter a day, right? And that's a high day, low day that I care about. Some of the other gentlemen care about the high of P12 and the low of P12, right? And if that's what you want to focus on, then that's on you, right? So we're going to turn off the reversals and we're just going to turn on models that focus on cash flow and targets for a ranging market, right? And now, not only do we get to turn on strategies and turn off strategies based off of the market environment, we can start building the expected value of that framework, right? If I know that we're ranging, the more time that we range and swipe this 930, the more likely we are to range for the rest of the day. So now I can adjust my position size to meet the criteria of the market environment and the model that I'm trading to match the market environment. There's people that in our room that trades like PTFX, he trades the 945 reversal. He runs it to the P12 high or low, right? He'll run it with size. There's people that trade 05 box breakouts, right? There's people that trade, if the last hour was a 05 box breakout was a green candle, then I'm going to try to grab the 05 breakout to the downside if we're in range 1, because it has higher probabilities of getting hit to the downside than the upside, right? We have multiple types of traders that trade multiple things, right? And it's not your job to trade all of them. It's just your job to figure out what cash flow move works for you and build the risk profile around and do all the work, and then come at it from that mindset of a abundance of power mindset. And like once you get to the compounding phase of one strategy, allowing yourself to spend the rest of your life to add to that, right? But not rush into failure and trying to trade it all, right? We talked about Thor. He's going through that right now where he makes plenty of money during the 930, right? But he keeps trying to jump to strategy without putting in the work and building the risk profile of these other strategies. So every time he goes over there, he doesn't have his risk profile and his TP and his stop loss correct. And he doesn't understand how to align that system up with the right market environment yet. But eventually he will, right? But his job is not to jeopardize the money that he's pulling from the 930, trying to learn it. So one thing I tell people is you have a quarter, right? You have the quarter the rest of your life, right? You got the education phase, the testing phase, and the compounding trading phase. Whatever you learned and tested should be traded, right? And it takes about 6 months to do that for any model, right? To get to the trading phase, right? But every quarter you learn something new, and whatever you learned last quarter, you build a risk profile for. And whatever you've learned and tested, you should be trading, right? And because the compounding phase isn't just I made it and I'm done. It's a phase where you focus more on the performance now, because now you're trying to level up your position sizing and learning how to turn on the increased position size and extend TPs right? But then you also should be trying to figure out other moves in the day, because now we're going to get into portfolio management and cycling, right? And I'll let Austin talk about that because he does a way better job than I do.
It's like the eighth wonder of the world, dude.
Yeah. And if you trade prop accounts, you don't want to sleep on this one. Get your pen and paper out and start taking notes, because he explains it the best.
So if you have a base level probability of anything, let's even take this 05 break that's about to happen. Let's use this. So right now, what Mickey's saying is like the range of the potential movement of the day now, because we've swiped market open and we've not made a good direction off of taking the high and low of the previous hour. You can see we swiped both sides. And so that's, again, there's just a lot of reasons with what we do, without getting too technical, that leads us to believe right now the highest probable movement or classification of the day is we range around market open, which is this box. So if we have that classification, or that expectation of price, and then we say, okay, well, when's that live price action component going to fully confirm? Well, this is the first 5-minute high and low of the 10 o'clock hourly candle. And so if, let's say, trading this 05 break, let's say this 05 break has an accuracy of producing 30 points. I'll just use this as an example. 30 points 70% of the time, 60% of the time. We can even say 60%, 65, anywhere in that area. If it gives you something that has a base level accuracy of anywhere between 65 to 70%, and now you're trading this with a positive risk management, meaning we're not just trading this and not using a stop loss, right? If we come back to the other side of this 05, we can invalidate ourselves. But if this move happens a good portion of the time more than it doesn't, but then in the prop firm world, we can leverage capital. We can literally have 4 different funded accounts. Let's say let's say there's 4 50K funded accounts. That's $2,000 of drawdown each, because that's the max loss. You're not actually trading a $50,000 account. You're trading $2,000 of drawdown times 4. So instead of using that $2,000 of drawdown times 4 and just copy trading that in every single trade you do, all you're really doing is maximizing winners and losers. It's still a 1-to-1 ratio of risk. So no matter if you're trading 1 account or 4, if you're just copy trading every single trade, you're not really doing anything advantageous for you. You're only making it bigger for both winners and losers, but there is no net benefit to you. So the net benefit to you in this case for portfolio cycling is if we have a base level accuracy of being above 50%, right? Even if it's 52, you're more likely to be correct a little bit more than just a coin flip. So if we have a good high probable price movement that can be accurate more than it's not, and then we have 4 accounts, well, how about at the beginning, I only start with trading 1 to 2. So if I have 4 accounts as a portfolio, let's say each of these boxes is an account. So 1, 2, 3, 4. These are accounts 1, 2, 3, and 4. And I just put 2 accounts on the copier, right? I put these 2 accounts aside. And let's say I take this 05 break and we just instant TP, right? Like we go hit TP. Great. Well, now half my portfolio got to experience this cash flow. But let's say to the downside, let's say we get stopped out. Well, now only half of my portfolio experienced a loss. And because I'm trading something with a decent accuracy and a high probability, right? On every trade that I take has a probable direction statistic of some kind, whether I'm trading and it's midnight open with a 65 to 68%, whether it's these levels you guys see me trade today, and they have a 93%, like every target, everything that I trade has a 70 to 80% probability outcome more than it's not. P12 mid 80 to 85, long false, going false in New York versus true is around, I think what, Mickey, is 68, 70%.
Yeah.
So we have a lot of every target, every reason, every direction we're trading towards has a good probability. So if now I get stopped out of this, I can then say, just like if I were to do any normal trading, I can say, hey, okay, well, now 2 of my accounts got stopped. I can now add another account to the mix take the same trade, because I'll usually give myself 2 to 3 chances at any given trade, just like anybody. Most people give themselves at least 2 to 3 attempts at a model. If you just get instantly stopped, then your trade sets up again. Well, now the likelihood of me mean reverting this statistic in and of itself. So if you were to picture this target that has a base level accuracy of, let's say, 65%, if you were to model that 65% on an equity curve of the times it's winning and losing, you would start to notice mean reversions of that accuracy. Meaning if something's happening 65% of the time, there's a typical run up that it consistently does, and also a typical mean reversion that statistic typically experiences. And so if I know that historically my model gives me a 65% edge, and the mean reversion is typically after a specific run up, okay, well, now after I experience a loss, I can add an account. This account either experiences this mean reversion without any of the loss, or if I lose again, now only this account experiences 1 loss, 2 get to experience only 2 of the losses. And I can either add another account for the trade number 3, and then if I lose all 3 trades, I'm done for the day. Or if now I experience a cash flow trade, this account has never experienced a single loss. This account only experienced 1 and made net profit, because then the next trade hit TP. And then only 2 of the accounts either are in drawdown or break even for the rest of the day. And so now my portfolio from a risk standpoint is diversified. I've spread that risk around, so that way no single loss impacts me as a net negative. And I'm actually able to have some cash flow coming in on a portion of my portfolio, while the other portion of the portfolio got to experience the front end of just, getting hit 1 or 2 times before that positive movement then gets fulfilled. So that's kind of a little bit of a long-winded answer, but that's a very in-depth just view of portfolio cycling. And anytime you hear us talk about it, that's what we talk about.
Man, this gunship, dude, is amazing.
Yeah, I've been letting it print on the stream here. If you guys have been watching, look, we've knocked it out. Like we printed to the downside at market open. We moved a good portion of that median, and then same thing here. We broke to the upside. We actually hit the average here, and we still have median and average MFEs. If I were to draw a box right here, so yeah, it's
just thinking about. Look at my screen real quick.
Yep.
Right. So like we talk about the dump pouch very, very much, right? So like, let's say you're taking an MFE to MAE off of whichever move this MFE is. We know that 50% of the time is hidden here, 50% of the time is hidden here. These both 2 lines get hit 50% of the time, right? And fuck me, that's amazing. Right. So let's say we're doing an MFE entry, an MAE entry to MFE, right? From a risk perspective, right, we know that this is the average. So this is where the anomaly of this move goes. We know this is where a majority of the move goes. We pull back to here before going to here, right? So from a dump pouch situation, right, like we can enter on the MAE, place our stop here, cover our risk, the distance of, like right now for simplicity purpose, I'll teach you the more advanced version in the boot camp, but let's say we do a 1-to-1, right? So we take half of our position off here, and now we've already secured cash flow. So if it hits here, cool. But if it doesn't, and we get stopped out, and it has these lower MAEs, right? That risk has already been covered, right? And I'm telling you, like this gunship is by far one of the coolest things I've ever experienced. Not that I'm trading this, is the thing that I'm testing this quarter, right? Like how to properly position size the way I like to, for the MA to MFE move while covering the risk and securing cash flow on the way, right? Not saying I'm trading it or what you should or any of that. Yeah, yeah.
They've done it twice.
So you would have added here, right? And then you would have covered your queen. And so you've been sitting in this trade with a risk-free. This is what risk-free looks like, because you would have taken half the contract, covered the queen, and then if it hits, cool. If it stops out, cool. No money lost. Freaking cool. I'm telling you, this is gonna be a fun quarter.
Dude, this is my favorite quarter of the year, bro.
Yeah.
And it has nothing to do with the markets and everything to do with the weather.
Yeah. Oh my gosh. Hoodie season is the best. Hoodie and fire pit season is the best.
I'm a hermit, bro. I don't know. I love just the cold weather. I love depressing. The more depressing the weather, the happier I am. The rainy, dark cloud, bro. I'm sitting on the porch, just sitting there like an old man.
Yeah. Absolutely. All right. So you ready to end it?
I think this is a good way to end it, guys. If you're in the Pack Trade group, we have the ambiguous hour coming on in less than 15 minutes with you guys seen one of the two. Pack PTFX freaking took this beautiful long here. He's probably going to be done for the day. But and then we got Cody. Both of them come on, and they've been in the trial phase of Pack Live Traders. They've been doing really, really well. And then for the PM session, we got Justin. You guys see him in the chats all the time. Justin, our mod and admin dude. And yeah, and then for those of you that are on the free side, every single day, Monday through Friday, or any time that we do it, we do a re-engineering session at 4 p.m. EST. So if you ever just want to, just like you see us trade, but then we recap it. So we recap the whole day. Sometimes we go super in depth. Sometimes we do just a little quick day because it was just that easy. It really just depends. But if you want to tune in, either way, it's free, open to the public. And then boot camp starts on October 18th for the next cycle. Here is the link right there. Scan the QR code if you want to join the wait list. You will not be accepted right out of the gate. If you join the wait list, you will get a micro charge on your card just to make sure that it
Is it just me or did he mute? Can y'all hear me?
I was just about to ask you.
All right. So what he's saying,
Yeah, I can hear you.
is I'll let Pocket explain how that whole situation works. But yeah, so yeah, I'll let you do it, dude. Because I'm not.
Yeah. So all it is guys, when you log in, it'll do it. The microcharge actually doesn't get charged. It's just to test your credit card. And then once we let you in, which should be today, actually, we're going to look at that today or tomorrow at the latest. We'll get everybody let in. So if you are joining today, which we've had a few people, so thank you so much for entrusting your future development in trading to us. I think you're in really, really good hands. We've done a few of these boot camps, and they've really kind of worked out quite well for us. So we're really, really excited to see some of you in there. We've got a bunch of people already in there, and really excited to see you guys come and join us for the live training. And we'll two times every day, morning and evening. We do go through everything with you guys. My lives that I do at 12, I often will recoup what we're learning. So you've got lots of really great ways to learn at your own pace and keep showing that you're kind of retaining the knowledge and all that stuff. So excited to show you guys all that. Thanks so much.
TP to all the individuals that took that 05 breakout to the downside that we were talking about, because you just wiped it. Good grief. Man, that's beautiful. So if you're taking the gunship, you were able to cover your risk. If you're taking the 05 breakout back down, you hit TP. Dude, what a great day. Austin, are you back? All right. Well, in that case, I get to run the show. So these were high probability moves. So like no matter what your trading experience, momentum, right? That buy 10 o'clock, we're usually doing continuation, whether it's an initial balance breakout, whether it's the hello? Am I still live or not?
You are, but he might have started the outro music on you.
Okay, can you hear me? My bad. No, I just it joined me back into the restream, and I guess all of a sudden it started playing my intro.
Hey, put my screen back on real quick.
Hold on. There we go. Sorry.
Yeah, no worries. So this is what we're talking about. So these are high probability moves, right? We teach you how to use a dump pouch to take the position for these. And like I was saying, like most strategies have 10 o'clock being continuation, whether it's a silver bullet up for the new age forward, whether it's, auction theory, whatever it is, right? Like, so you can see that like our systems were picking up on that as well, right? And we were able to use the MAEs as entries, and we were able to cover the queen, meaning protect if we do get stopped out, it's risk free for us. We weren't betting on that because we saw the range one price action. And so what we were saying was 05 breakouts to the downside, swiping back through was the trade that we would take. So if the pack members, like you took that, that's cool. You saw the rejection of the 05 box right here, the swiping action, and then the Q1 high being taken out. Now we're expecting just the continuous range. And this is what I'm saying. Like I just showed you an example of long momentum versus short momentum. I showed you, this does happen 50% of the days. These MFEs would get hit and supported, but there's 50% on the other side of the coin, right? We picked up the swiping action. Obviously, we can point out the glaringly obvious Friday, right? But we're not always going to have a Friday to base our decisions around. So we have to use other things. And 930 swiping, taking out this high that turned the same long false, right? All pointing to a range one day, right? So within the pack trade group, you should have been able to identify that. You should have seen the swipe in here, right? And then you could have used the dump pouch, entered shorts wherever, cover your risk, pay the trader, ride it back to wherever your targets are, right? So that's why because like I wish and I hope one day I'm able to tell you, like, hey guys, just take this strategy right here every single day, whether it's a DMP, a trend day, a reversal day, or a range day. You can take this position anytime you want, right? But reality is, that's not the case. So instead, we adapt to the market environment that we're given. And that's where we can tell if you're naive to trading, if you're new to trading, if you start thinking there's a holy grail strategy, or that the strategy outweighs the position size, and the position size outweighs when to turn that strategy on and off. You can tell your experience level, because there's not an intraday move that me and Austin haven't back tested. There's not a strategy out there. I've tested all the ICT stuff, all the auction theory stuff, all the DR stuff. If anything, I am weaker with the support and resistance, supply and demand stuff, but they're just 15-minute footprints. And I've already tested all the hourly footprints, all the 4-hour footprints, or the wicks, we call them footprints. But it's the same scenario across it. As a matter of fact, if you just do a data scrub from 1950 to now, or whenever to now, you'll see that majority of the day, 50% of the days are green, 50% are red. The moves up are matched with the same amount of moves down, right? So like every single piece of data tells you, like, you've got to be a dynamic with the market from an intraday perspective. I get it, swing traders like have more edge to the upside, but you got to know what kind of investor you are. Are you an investor? Are you a swing trader? Or you're an intraday trader? And from the intraday trader approach, you've got to be able to be dynamic with the market. You don't get forgiveness when you try to marry one single strategy. But yeah, we can end it now if you want to. I just wanted to point that out.
Yeah, man. No, I appreciate you doing it. I don't see anything else on my screen. I'm just sharing my screen just to show you guys. Now this is what we said. Like, today has been the sports broadcasters, bro. They'd be spinning in their graves right here, because, dude, we have literally we've married statistics to live price, and it has been hitting nonstop today. I mean, we called this the long false move, the break off market open, the range classification, taking the
945 reversal that PZFX had.
945 reversal. Look, we took the Q1 low of the 10 o'clock hour, sucking back into the 930 range for potential range one day. So we know that if this is going to be an in statistic hourly candle, we're due for a new low in Q3 here. So by 1030, whatever low we've made in this 15-minute candle, we're due to take. If we suck back into the Q1 range, we can anticipate a doji hourly candle. So, I mean, this day's been, like, you couldn't have asked for a better day in a crazy environment like this. Statistics still ring true. So I'm going to call it here too, guys. I hope you guys have a wonderful rest of your day. If you're in the pack trade group, like I said, ambiguous hours coming on in 3 minutes. Hope you guys enjoyed the stream and got value. If you did, please hit that like button on the way out. And with all that being said, ladies and gentlemen, stay grinding on your freaking goals and never let anybody tell you that you can't do something they never done themselves. I'll see you guys later. Bye, everybody.
Later, haters.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for